Today, Ford is better by about 3.25%. So, Cheryl, he's extremely optimistic and positive, but of course, as the news from the Wall Street Journal that's just out within the last 10 minutes is that perhaps those employee buyouts, not enough employees took them at the moment. So we'll see what happens.
Certainly more problems for the automakers, the big three. Well, you know what? Gold is losing some of its luster today, a lot of its luster.
After months of being the hot commodity, don't blink, because that is, people are saying, what's wrong with my eyesight? Yeah, it's down $65, but the precious metal, while taking a tumble today, has been on an extreme run-up as of late. But is it time to give up on gold? Here to debate it is the biggest gold bug we know, Peter Schiff, along with Mike Norman, who has a contrarian view to the topic. No surprise there. Peter, down $65. Is this the sound of a bubble popping or just a buying opportunity?
Just, again, another buying opportunity. There are a lot of very nervous longs in the gold market. They've been here for years. They think it's a bubble. They've got one foot out the door all the time. The minute it starts to go down, the catalyst this time was the idea that by cutting interest rates 75 basis points, Ben Bernanke is now an inflation hawk, which is the biggest bunch of nonsense. I mean, he is creating inflation. All the forces that are driving gold higher are still there. They're there in spades. So let the speculators get nervous. Buy this dip.
Cutting 3/4 of a point is not exactly hawkish on inflation.
Yeah, I mean, here's the thing, Mike. I mean, I had someone tell me that, look, just because you're afraid of the stock market doesn't mean you need to go into the gold market.
Well, you're right. You don't have to go into the gold market. Cheryl, you're absolutely right. In fact, gold has been a terrible investment. It's actually been a terrible inflation hedge.
If you say that?
I'll tell you how I can say that, Liz. Anyone who bought gold in the late 70s or 1980 is down still 50% on their investment in inflation-adjusted terms.
All right, look, so if you bought the NASDAQ in 2000, what are you down?
The stocks have been up. Stocks have been up.
2000.
The NASDAQ is not, but the stocks in general, over history, stocks have far outperformed gold as an asset class.
Look,
every ounce of gold ever mined since the beginning of time is still out there. It's not like oil. We burn it and it's gone and it goes up in value and it's disappearing. Gold is all out there.
I'll give you one big statistic if you want to measure it. In 1929, the Dow was worth 20 ounces of gold. Now it's worth 12.
Well,
it's down 40% in 100 years.
I'll give you
Mike, please. That doesn't mean a lot to the average investor.
Well, it means,
I'll tell you what does mean a lot. If I bought it at 300 and it's 900 now. So here's where people get nervous. Wow, it's seen a significant run up here.
It went up 24-fold during the 1970s, so it's only tripled so far in this bull market.
It went up 24-fold because it was held down for 50 years artificially at a pegged rate, and they allowed it to reach its natural rate. That's why it went up. It had to go up.
When people are buying gold, though, it's not getting out of the stock market. It's getting out of the dollar. It's the dollar that's losing value. Gold is an alternative necessary to stocks. It's an alternative to paper money, to currency, right? And the gold is safer than the dollar.
It's not.
Safer than the dollar.
What about platinum? What about silver?
I own that too. I own both platinum and silver.
Okay.
Do you hate the metals?
But I don't hate the metals. Look, there's a time to buy commodities. There's no question about it when they're cheap and when they sell for below the cost of production. That is not the case now. It was the case back in 2002. And to give Peter credit, he was saying back then, and so was I for that matter, to buy gold back then. But not after it has advanced so much. Gold will return to its historical norm in terms of the return it gives. Look, gold pays you nothing. Gold doesn't give you, it doesn't pay dividends, it doesn't pay interest, it's a pure speculation. You've got to buy it on the hopes that it goes up. The biggest user of gold comes from the jewelry industry. By far, the biggest demand comes from there, and that is like tapering off.
Gold is money.
But they're moving away from gold.
Yes, it is money. It's been money for 5,000 years.
Do you go to the supermarket and pay in gold bullion? No, of course not. You pay with paper money.
It's Gresham's law. I want to get rid of my paper money and hoard my gold.
Gold is not money.
But gold is money. It's always been money. Every time we've tried paper currency throughout history, it's always ended in disaster.
Where's it going now? Where does gold go from here?
Well, gold's going higher. It's going to go to several $1,000s an ounce. I don't know what the top is because I don't know where the floor is on the dollar. But based on the course we're on right now, we're going towards hyperinflation. So there's no telling where we're going.
And we're going to leave it there, but I got to tell you, I just interviewed a jeweler on my show who said that they're getting away from gold because of the price.
Exactly.
So
and that's where most of the demand comes from.
No, well, more of it's going to come from monetary demand. People wanting an alternative to paper currency.
Pull it out of your teeth. Get it out of your teeth. You'll be rich. All right.
The countdown to the closing bell is coming up.